Hello, I am Piyush Dave, a FinTech professional, and today I am going to share a algorithm technique which is based on OBV, on balance volume algo. This is very interesting technique, but at the initial stage, it's very difficult to understand how actually OBV works. One more thing, you cannot do this manually. You need a system to calculate this OBV continuously. So first we will try to understand this in mathematical calculation. I'm going to show one master table to understand OBV. And once we understand OBV, we are going to see the calculation of the OBV and the trade in the simulation environment. So first part is, the logic is very simple. The price increases, OBV is also increases. There's a strong bullish trend is going on. That means the market is going to go up. If the price is falling and the OBV is also falling, there's a strong bearish trend is going to happen. Normally, we don't want to work with the bullish trend or a bearish trend. We want to find out whether there is a hidden accumulation is happening or hidden distribution is happening. If there is a hidden accumulation is happening, that means the price may reverse from it. So we can buy it at the lower price and we get a lot of profit. So price is flat, but OBV is increasing. That's called hidden accumulation. So some smart money is buying that particular stock. Price is flat and OBV is going down. That means there's a hidden distribution. Some smart money is selling that particular stock. So we just need to find out the hidden distribution or a hidden accumulation. Here we can make a good money. Here we can make a good money, hidden accumulation and hidden distribution. So first we will try to find out this with OBV. So OBV calculation is very simple and OBV slope we take into the consideration. So first part is, we just need to understand the control of OBV. That means whether the buyer is in the control or whether the seller is in the control. Now let me show you the actual calculation, how OBV is calculated. So first, the logic is OBV start is basically the addition of the volume or the subtraction of the volume. And that addition of the volume and the subtraction of the volume is depend on whether the price is moving up or the price is moving down. If the price is moving up, we consider the volume addition with the OBV, volume addition with the OBV, and if the price is moving down, we consider the volume subtraction from OBV, volume subtraction from OBV. And if the price is flat, the OBV remain unchanged. Okay, let me start this with the logic. Suppose the previous value we need to consider as 0, OBV is 0, and now the volume is 1200. So previous value is 0, OBV, but the price is increased. So we are going to add the previous value plus the volume. So there is an addition. Now new OBV is 1200. Logic is, if the price increases, add volume, price decreases, subtract volume. Now in the next part, the price is decreased. So now we are going to subtract this volume from the previous OBV. So previous OBV is 1200 minus 900. So the new OBV is 300. Next, in the next iteration, the price increases. So we are going to add this new volume into the previous OBV. So 300 plus 1500 is 1800. Now the price does not change in the next iteration. So no, we are not going to change the OBV. OBV remain same. Logic is very simple. If the price increases, add the volume, add the new volume to the previous volume. If the price is decreases, subtract the volume from the previous volume. That is the logic. That's called OBV. Okay, now let me show you how this actually works in logic of a table. So I'm going to show a table for master table for the reference, and you can able to understand this. So I already explained you this, and this says, okay, for the reference purpose, there's a strong buying is happening because we can see the price is increasing. Here the seller is active. Aggressive accumulation is happening because the price is increasing and we are adding it, and now there is no participation. So first cycle is only to understand what is happening. Now let me show you the bullish divergence. So here we are very much interested because after the divergence the price will going to go up and we are going to get a good profit if you catch that kind of accumulation. So always that kind of accumulation is done by the smart money, and we are interested into that only. So first let's understand the price is supposed down. So previously let's consider the price was 10204. The price is down and this is the volume, and let's consider that the previous OBV is 10,000. So I have considered this value. So that means this is a calculation from previous has been taken. So 10,000 minus this 300, so it's 9700, and the OBV, that means the slope is negative. Why is the slope is negative? Because we're subtracting it, so the slope is negative. So price is falling, but there is a weak selling is happening. Okay, now the price from 200 again increased to 201. That means price is up. We are going to add the volume to the previous value. So this is OBV. We are going to add this 900. So the new OBV is 10,600. Okay, now the slope is become positive. So we can say this is strong buying is happening. Here the selling become weak. Here there's a strong buying is happening. Now the price again move down, but you can see the volume decreases. So we are going to subtract it. The slope is negative, but the slope is very small negative. You can see previously the slope was minus 300. Now the slope is only minus 200. So now there's a chance that the slope is decreasing. That means the volume on the seller side is decreasing. There's a huge possibility that there's a reversal, and now we get the price on the upside. When the price go upside, the volume also increases. That means the slope become positive and now the reversal is possible. Let me explain you this one more time. You'll understand. Price increases, volume increases. Now price decreasing, volume decreasing. This was happening. This volume was happening. The volume on the when the price was falling, the volume was low. So from suppose 200, it has come to 198. So that means prices fall, but the volume was only 200. And when the price increases from suppose 198 to 199, the volume increased to 1000. That means you can understand when the price is falling, the volume become low. When the price is rising, the volume become very high. That means there is smart people who are accumulating on the lower value, lower price. Okay, now this is basically called as bullish divergence. Now let me show you the bearish divergence also. Let's consider this price is up because let's consider this price was 300 and the price went up to 304. The price is up, so we are going to add this to the previous OBV. Let's consider the previous OBV is 15,000. We are going to add this. So 15,000 plus 300, positive 300. Now the price fall and you can see the volume increases. Price fall, volume increases. We are going to subtract it. Slope is become negative. Again price go up, but the volume is very low. So that means we get a confirmation. Previously, the volume was 300. Now the volume more decreases. That means nobody is ready to buy. The top is forming. From here, there's a huge chance that the stock is going to fall. Okay, now the price decrease, and the volume again increase. We can see, okay, there's a confirmation happening. Now from here, it is not going to go up. Let me explain this one more time here. Let's consider the price was 198. It went to 200. The price increases. And on that time, the volume was only 200. Now suppose price increases, the volume was down. Now let's consider the from 200, the price decreased to only 1 rupee. 190, only 1.199. The price decreases, but the volume become very high. So somebody is selling it. So that's why the volume is very high. So price is saying, okay, I'm going to increase or decrease, but volume says a lot of things. So OBV catch this part. The slope catch the part whether it is going to reverse. There is a bullish divergence is going to happen or a bearish divergence is going to happen. I'm going to give you summary one more time. This is very interesting. Algo. I'm going to give you summary one more time. First part. OBV is basically tell you whether there's a accumulation is happening or distribution is happening. That's the logic. Price is flat, but OBV is increasing, accumulation is happening. Price is flat, OBV is decreasing, there's a distribution is happening. That means either there's a reversal is possible from the top side or from the bottom side. If we can catch this, we can make a very good money. Okay, now here we try to understand the calculation by 3 different cases. Here we are just understanding how the OBV is calculated. So the price increases. Whenever the price increases, we add the previous OBV with the new volume. If the price decreases, we subtract the previous OBV minus the volume. So this is slope positive, this slope is negative, because if we subtract, the slope is negative. If we add, the slope is positive. More the positive slope we consider, okay, there is a chance that the OBV is increases. More the negative slope. So we need to understand this, whether the OBV is increasing or decreasing. Now in this case, if you see, when the price go up, the slope increases. And when the price go down, the slope, that means the volume OBV is low. And here the price go up, the OBV is high. So whenever price is going up, the OBV is become more and more higher. So that means there is a chance that the stock is going to reverse from this. Let's consider this stock was falling. Now there's a chance that the stock is going to go up. Now here, bearish divergence. In the bearish divergence, when the stock move up, the OBV is low. But when the stock move down, the OBV is very high, or we can actually see the OBV slope is increasing. Again, price move up, OBV is low. Price move down, OBV is very high. So you just need to catch what is happening with the OBV. OBV is increasing or decreasing with the price. If you can able to catch this, you can trade it very smartly with OBV. And if once the OBV, if your algo catches, then you can make this with price action, and you can create a very best algo. So I created an algo with only OBV, but OBV works better with price action also, like from VWAP, RSI, some momentum, some trend finders, some moving averages. If you combine OBV with the price action or the moving averages or the trend follower algo, it works beautifully. But here I'm just focusing on how to work with OBV. That's why my algo only works with OBV. Now let me show you this in a simulation environment. So the simulation which I'm showing is not going to give it a great result, but it works very nice with the logic of OBV. If you want the best result in the OBV has to be combined with the price action algos also. So here we have the exchange with us. Okay, sorry, I have just started the algo. Okay, let me start the first exchange. So this is the exchange file which I have created, which increase or decrease the volume based on the price. Okay, so we have the exchange file with price and the volume. So there is a continuous change in price and the volume, and we are going to work on this with our OBV. So this is my exchange file. I have no control over it. It basically changed the value automatically and very randomly. So I have no control over this price, but I have control over my algo. So now algo is going to fetch this price. The algo is going to fetch this price from the market. Let me adjust the window so we can actually understand what is happening. Okay. So now this is my algo which is running, and this is the price. Okay, we have got the, because the OBV is falling, we got the short entry. Okay, we book the profit also. It's so fast, it's happening so fast. Okay, we got the OBV is negative. Okay, we exit also. Okay, great, it's happening so fast. You can see we got a long OBV, we got the long entry. Okay, and you can see the profit is, it just take the profit and loss based on the OBV. So OBV negative slope or positive slope, and the price increases or decreases. Based on that, it basically fires a 1000 quantity, 100 quantity uh, trade. Okay, we got a short entry again. It booked the loss also. You can see it booked the loss very fast. When it get reverse, it just book the loss. When it get in the right direction, it book the profit also. Okay, take the profit at 600. You can see how fast it's happening. With normal calculation we cannot even understand. Okay, I have intentionally created a delay, still it's very fast. But in a market, it's 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 so fast that a normal human cannot work without the algo. So this is happening very fast, you can see. So we got the summary as 2500 as a profit. Okay, that means almost 2%. Okay, we got one more profit. Okay, we got one more short entry. It's happening so fast. You can see 3% is a profit. 3% is a profit. Okay, I intentionally created a delay so that we can check what is happening. It's doing a live calculation of OBV, and it takes a trade based on the OBV is positive or negative with the price logic. So we got the, okay, we got one, we booked the loss. Okay, we book one profit. Okay, it's happening so fast. You can see the OBV is falling or OBV is increasing. The calculation is going very fast. I think let's create some delay so it will be visibly good. Okay, instead of 3, let's create 4 as a delay cycle. Now this creates some problem because uh, the market delay is different and this delay is different. But let's try this so that we can able to understand what is happening with the OBV. So I intentionally create a delay. The market is slightly faster than us. So there's a chance that we might have some losses because uh, after 2 to 3 ticks, we are actually calculating the OBV. So OBV is positive. Okay, we have took the profit. But now you can check out what is happening with the OBV. OBV is increase or decrease based on that. It's basically trading on the logic. Price increases, OBV is also positively slope increases. Okay, we got one more profit. Now the OBV is only is minus 50. Okay. It says OBV is flat, don't take any entry. Okay, now the OBV is increased. It has taken, okay, it has booked one loss. Stop loss also hit. Okay, you can see. So Algo is very smart. It does not care about the emotions, fear and greed. It just take the profit. It just book the loss. That's a smart act by the Algo. You can see we book one more profit. Now, why this loss is happening? Because this is slightly faster, this is slightly slower. I intentionally created the delay so that we can able to see what is happening with the OBV. Logically, both should be of the same speed. So you need to check out your tick by tick speed with the market, and then only you have to assign a speed of your algo with the market speed. What tick by tick data you're getting from the feed, that you need to check out how much speed, how much speed it is giving the reading, and based on that we can work. Now this profit is also uh, not to be considered because we are in a different speed from market as well as the algo. But to check out what is happening with the OBV, we have intentionally created the delay. So OBV reverse, it books the loss or profit, whatever happening. It working very beautifully. So what I suggest, you try to understand OBV in a more better way. Watch this video one more time and mix the OBV with some price action also. It helps a lot in terms of understanding the market price action plus the volume logic with OBV. Backtest it with a lot of readings, like I do a lot of backtesting. Then understand your requirement of the trading, and then um after certain backtesting or confirmation, you can try with the market also. Try with a small quantity so that if it go against you, it does not harm your capital. So I hope this is very much clear to you. Try it and uh, test it and then use it in a market. So I hope the OBV concept is clear to you. Thank you very much.